All right, we're here at the Real Estate Roundtable with IPRG, and today we're going to talk about 2022 as kind of a year in review, and we're going to talk about what our predictions and forecasts are going into 2023. I'm here with some of the partners at IPRG, so to start it off, let's talk about 2022, guys. I guess for our firm, it was the best year in our company history. We did more closings than any other year. We put more deals under contract than any other year. It was a fascinating year in a lot of ways with just where interest rates started out going into the year and kind of where they ended up at the end of the year. It was a fascinating year in terms of the rental rates that we saw, through the spring and the summer and then going into the fall and towards the end of the year. There's obviously new trends and new dynamics that started to emerge in terms of where the opportunity was and in terms of where buyer demand, is at the moment or was throughout the course of the year. So is there anything you guys want to pick up on to start this off?
I mean, I think 2022 was a very good year. I think that, I thought 2021 was a better year. I think that each year had its ups and downs. I think 2022 probably was a strong year for us and for brokerages because most of the year was very strong, right? Where you had 2021, we started the year off pretty slow, right? The start of 2021 was a slower year because you're still dealing with like the repercussions of COVID and people weren't really doing anything, and then it exploded towards like the spring and through the summer.
In 2021.
2021, right? It exploded towards call it the summer into the end of the year. And then you start 2022 with just a bang of a year. So 2020 was a very, very strong year from start to the interest rates started going up. And that's what I think really halted 2022 when things started slowing down towards the fourth quarter when rates went up. And that's what slowed the party of that. But if that didn't happen, 2022 would have been a crazy, crazy, crazy year. And it still was, but it was a little muffled at the end because of the rising rates. I think. Okay. But overall, phenomenal year for us.
Anything you guys would like to add, Donal, Steve, in terms of 2022?
2022 was a good year. I mean, on a broader view, the last decade, for most of it, has been pretty easy in real estate and brokerage. And I think you look at 2019, the rent regulation laws changed. Mm-hmm. Then you have COVID. Now you have raising interest rates. It just seems like it's been a constant battle, the last 3 years. And at the end of the day, deals are still getting done. So I think to a lot of those that have been sitting on the sidelines waiting for something more negative, if that's even possible, to happen, we just haven't seen it. And people are getting creative, and they're still accomplishing their business goals. And I'm excited to see what happens in 2023. Yeah. We're off to a really strong start.
Yeah, I agree with all you guys. I think this past year was a very strong year. And I think it was really due to the rise of apartment rents. And I just think we just saw from the beginning of last year to now, it's like we're in a totally different rental market on how we underwrite these properties. So I think that really pushed a lot of the sales through to make it a very strong year.
So, all right, we're going to bounce around between talking about last year, talking about projections going into this coming year and where we are now. But when you say we're in a very different environment from where the rental rates were to where they are now, like what do you mean by that? Like where are the rents at this point? Have rents dipped recently? I mean, it's obviously the winter, which is a tough rental season. But like where do you see the rental market?
I mean, I think the rental market is very strong. I mean, to give you exact numbers, I mean, I would say like on renovated product, it's like in North Brooklyn, in an area that I focus on, it's around like $60 a foot, like more in some areas, $70 a foot. And I think that's very aggressive. From where we were seeing in the beginning of last year, it's like we weren't talking about those numbers. Yeah. Everyone was kind of like, where do I price these buildings? Where is the rental market going? There was a big question mark.
For the story of last year was the rental rates.
That's what I think personally in my market, in a market that we track and we do a lot of activity in. I mean, I think the rental market skyrocketed.
It did, and for sure. The summer of 2022, the rents went up a lot, and there was definitely a premium.
Oh yeah,
and I think it came down a little bit. but you can go around the table here, and rents are up right now. And we all live in different markets, every single one of us, different submarkets, I should say. And if you ask any of us right now, the rents are higher right now than they were in 21 and 20, obviously, and 19. So the rents are up, even though they're not at like some stupid peak like they were in the summer of 2022. The rents are higher right now, and this is not like a frothy time. It's the winter. It's cold.
Yep.
Rents are high in these markets.
And they've stayed relatively that high from the summer. It's not like they've dipped that much. And I would give you an example for the listeners out there. I mean, I was looking at a building that we sold earlier the last year, right? And I looked at those pro forma underwriting that we did on a free market apartment.
Yep.
And we were around for a 2-bedroom, 1-bath, boxed out. We were at $3,000. That person bought that building, rented it out, and I looked at it recently. He got $3,800. So it just shows you the difference
Without putting a dollar in.
without putting any money in. So it's just there was all these conversations. We have so many deal stories of buildings that we sold last year, of photographs of the rental brokers sending us pictures of like a line down the road for apartments that were on the market, and it's just crazy the amount of demand that some of these apartments were getting.
Is that still the case now, or is it just that we don't know because of the seasonality of the rental market?
I think I would go with that. I think we just don't know. I mean, it's the winter, and I don't think a lot of people want to be outside. I don't think you're going to see that, but
I think it's
I
plateaued.
do think you're going to see
you say?
that trend pop back up.
I think it plateaued.
You think it plateaued?
Essentially, you had a percentage of people, whether it was permanently or to their second homes, leave the city. Everyone came back. Everyone was looking for apartments. It was a frenzy. Now, I think as the dust has settled, not many new units are coming to market because of, regulations or getting rid of abatements. I think you're pretty much seeing where the rents are in each market. Now, could it go up or down a little bit?
I know they still
Take
went
that
up, but
market.
I don't know if I kind of see something. I see a different story kind of happening in 2023 a little bit, just because of the interest rates. Like, we have this conversation all the time.
What do you say?
I mean, with the rise of interest rates and where interest rates are right now, I mean, I don't think a lot of people are going to be buying houses.
It's valid.
And I think a lot of people are going to be going back to renting because they can't buy that house. So,
Like Steve, I agree. Go ahead. Sorry, Don.
like, I mean, we'll take another trend that you're starting to see towards the end of this year. Like, 2 of the biggest real estate firms in Manhattan started funds where they're raising money, where they're converting office building to residential in New York City. I mean, one being Silverstein. I mean, they're starting $1 billion fund to convert office buildings into residential. So I mean, I'm going to see that trend. I think there's going to be a trend where rents are going to go up a little bit more.
Do you think there's a lack of affordability in terms of home ownership, which is pushing people to rent, and now we have like no real new units coming to the market with no 421A, and there's no individual apartment improvements to improve the rent stabilized product, and we have all those vacant rent stabilized units just sitting around. So there's a whole supply constraint in terms of what's going on in the market. So your prediction is rents stay where they are going forward, or you think rents are only going to continue to go up?
I think
looking into 2023.
I think they'll slowly. I definitely think they won't go down. I think either they stay where they are, they creep up a little bit, especially in the better months.
Yeah.
So I'm like in between.
Okay.
I think there was something a very high point in the summer of 2022, last year, but I don't think rents have plateaued. I think it depends on what you're renting. I think if you have like the cookie cutter, crappy, 3-bed, 1-bath in Bushwick, there's a lot of those, and that's a hard sell. And I do think that those were a little too frothy, like in the summer of 2022, and I think those are gonna start, plateauing or going down a little bit. But good units in good markets, Williamsburg, Greenpoint, Brownstone, Brooklyn, I think those units are still going to be in high demand. Maybe it's not going to go up, but it's not going to go back down. So I think those crazy rents that you saw are still going to be there.
So the reason why I think what's happened with a number of things. I think, yes, Donald made a good point where home buyers are being forced to be renters, which is going to drive demand. But I also think because of what you're seeing in, say, New York City, I think it's built other submarkets that if you see in the news too, like you look at Jersey City, rents are at all-time highs. If you look probably at LIC, other parts of Brooklyn. So I think everything's going to level out. And I really think 2023, I'm going to dub it the year of stability. For the last 3-4 years, it's been uncertainty left and right, whether it's pandemics, whether it's interest rates. And I think now you're going to get a good grasp on where the market is, where it's headed, and I think you're going to be able to make fundamental decisions going forward.
I could see that. I mean, I think for some reason, starting out the year, it's definitely been stronger than I thought anticipated. And I think it definitely has to do with interest rates. Obviously, they've come down a little bit, which is definitely good. I think there's a lot of people, if you took a pulse of buyers right now, and they could easily be wrong, and brokers, people might think that interest rates aren't going to go up again.
I don't think.
And if they
think
do,
that.
it's going to be like 25 basis points.
I think
I
people
think
are
they're still
pricing
gonna
in
go up.
modest
Yes.
increases.
Modest.
I agree with Steve in terms of the year stability. I think
Yeah.
you're not going to have like this sharp swings that
Yeah.
we saw in previous
Like,
years.
well, that's a sharp swing. Give
Double.
me,
Well, I
The
mean,
interest rates
yeah,
doubled.
interest rates went from low threes
that's
to in
insane.
the sixes.
but like, you think they're going to go up a full point?
From the Fed, I don't think we're going to see the Fed raise interest rates a point. I think maybe half a point, maybe 3/4 of a point. But
So that's modest.
I also think there's a chance that either they stop raising the rates or that the rates start to come down a little bit. But I think for the investors, they're able to start pricing that in where, all of a sudden, I think a lot of these investors, they were like kind of sitting on the sidelines. They were waiting. They saw the rates going up and they were just thinking as rates go up, prices will come down. I'm just going to wait and like try to time the market and try to find the bottom and then I'm going to buy. But all of a sudden, we saw the treasuries pull back. We're starting to see signs that inflation is really slowing down. And I think a lot of these investors are all of a sudden being like, well, if I don't start to act now, like I'm going to miss this opportunity to get this better pricing. So I feel like there's all of a sudden like some serious motivation for the buyers to get off the sidelines and start putting capital to work. I think what's been interesting about the past few months is there's no shortage of liquidity. There's a lot of cash. There's a lot of money in the market looking to be placed. The only issue is in terms of pricing and in terms of buyers just wanting to get better pricing based on the cost of capital.
What we are seeing, which is interesting in the last couple of weeks, we are seeing people sell, meaning like pain selling, where like obviously if you look at a price that's selling for today versus 2 years ago, it's like, oh my God, that's such a low price. Obviously, I think the price makes sense of where the interest rates are today and the appetite for that type of stuff, but people are pulling the trigger and they're selling.
Why?
And you're seeing it, right? Like people would have said, oh, I'm never going to sell for 7 caps in Bushwick. And you're seeing it left and right.
Yeah.
People are selling. And obviously, is a 7 cap in Bushwick an amazing deal today? No, because it makes sense of where the interest rates are and where the market
Why
is.
are they selling?
I think they're like, you know what? This is where the market is, and I'm doing it. You're seeing funds sell. I mean, we're not going to name names, but there's a fund that's in the transfers like crazy right now. They're selling everything. And and they're losing money in every sale.
Why?
It looks like.
Why are they selling?
I think, listen, obviously you don't know the pressures that they're getting from banks.
Do you think it's a financing issue?
It's probably
Has to do with it.
They're definitely getting pressure, but I also think there's a mentality that I know where I stand right now. It's not going to get. It could easily get a little worse. It's not going to get better, and I don't have I don't have the windows anymore. Like I'm selling, and people are doing it, and people are also buying. And I don't think they're stealing these buildings. I think if you compare pricing from 2 years ago, yes, very very different in price, but they're actually doing it. So people are like, this is a good deal. To agree with Steve, what he was saying about stability, I know where the rates are. I will lock in these prices. So people are buying riskier deals, right? Like there's times when no one's going to buy a 6-family in Bushwick because they didn't know where rates were going and all that stuff. People are now doing it. People are buying, the cap rate deals in a Lefferts Gardens or a Crown Heights when they weren't doing that a couple of months ago because they're like, where are we going? Now people are doing it.
So who are the buyers now?
Who are the buyers now?
Yeah.
It's a good question. Depends what it is. I think there's a lot of people that
Just anyone with money? Like a lot, like is it the syndicated people? Is it the private people? Is it like
it depends what it is. I don't think syndicated money is buying rent stabilized product. I don't think syndicated money is buying a product without a route to make money. Right? Like how
Of course.
Yeah, I mean, if you're a syndicator, what's your
Yeah.
pitch there to any
Yeah, you
investor?
can't,
Like,
but, like-
you have no pitch.
like a 6-family in Bushwick with a few few stabilized and a couple free market where the cap rate makes sense. There's buyers for that if the cap rate's right. That being said, like that buyer's not gonna tell you that, oh, I got rich by buying this 7 cap in Bushwick. He didn't get rich, but it made sense, and there's cash flow, and there's a path, right? But you're not going to see syndicators do that because how are they going to make money? What's the pitch to invest?
There's no
like
exit
Donald said.
strategy.
It's not a strategy, but there are buyers for it. So to answer your question, who are the buyers? Completely depends on
I think it's
what the
private
product
What the
is.
product is, for sure.
Yeah, and I think to that it's private capital. I think it's just your private investor,
Private investor.
2-3 people that know each other, raise money, and they bought this building together with all the same investment criteria, the same game plan.
I think, to be honest with you, I think the raised capital, like, they're not the strong. They're not even close to the strongest buyers right now. Like, they're not like people that were buying, like last year, like heavy, or in 21. Like, they're not the best
So-
buyers right now. Like, you can think of, like, we're not going to name names,
So-
but those syndicators that you saw in the comps time and time again,
So
I have not seen them.
Like, what are the deals that people are buying right now? Like, is it the heavy value add, like get buildings vacant, like renovate and then refinance, or is it just kind of patient capital, like want to own clean bricks, good bricks, get some cash flow? Like what are the deals that, like, what type of assets are people looking to buy? What's in demand?
I think everything's in demand. I think
Yeah.
I think land's in massive demand, and I think a big part
For
of that.
condos?
Listen, I think I was speaking to a colleague of mine yesterday, a good friend, who's a broker as well, and I agree with what he said. He said that land is in extremely high demand. Obviously, it's in very high demand in this office. We sell a ton of it because there's a 2-year, 3-year window there, right? Like, you have to build the property, you have to get it approved, and there's at least 2 years there before you have stuff back on the market. So there's a waiting period. Like, they know right now it's not ideal, right? Interest rates are very high, but who knows what's going to happen in 2 years? So I think that's attractive, especially in markets where they see growth. So I think land is an easy sell. I think free market is an easy sell. I think value add obviously is always been in high demand. The only thing that it's stabilized, I think, is still I would list stabilized deals in the right location, but where I wouldn't list deals where if it was stabilized and it was a ton of violations and there was no upside like that's an issue. So I think everything's in demand depending on location.
Yeah.
And to piggyback on what you're saying in terms of land, I mean, I think it's in demand for all the things that you just said, but also you're not providing many options to get this free market rent anymore. The only way to really do it is to file a permit for a new build, and that's how you do it. I mean, like, there's very few options to get free market destabilized rents. That's one of those options. So I think a lot of investors are looking into that in New York City because that's all. Those are the cards that you're dealt. That's
Donald,
the only hand
do you think
have.
that land's the most in demand asset right now?
I think yes. I think
do
so.
I.
I think
In
that
core markets.
in core
In core markets, but dude, listen, the prices are higher than they've ever been. Like, we're pushing prices, like, take Williamsburg, for example. We're hitting prices in decent Williamsburg right now that's higher than I've ever seen.
Now, these rentals are condos.
Both.
both. Yeah, they are both.
They are both. Rental has been even stupider in terms of where it's selling. I mean, it's really high pricing. And it's because of what Donald's saying. I mean, it's happening.
Yeah.
Right?
I agree with you. Yeah.
I mean, look, if you believe the rents are going to continue to go up, especially in these markets like Williamsburg, Derek mentioned 2 to 3 year, or someone mentioned 2 to 3 years to build. Rents are probably going to be the same 20 to
Yeah, but
30%
hold on.
higher than what they
I
are
You
really-
just
today.
said it. You said it at lunch today, or Justin did, right? We were talking about this. New builds, there's a premium for them, and he's absolutely right. So if you buy a piece of dirt in a good location and you build a brand new building, they're not making any more land, right? And then you have a brand new building that's not an old building, and there are funds and raised capital and pension funds that are going to pay a 4 cap for that, which you can't get anywhere else. You can't sell anything else for that price. And there's buyers for it because it's a new construction building in a good location. So that's why people are buying land for big numbers, because they're going to bet a brand new piece of real estate on it, which they could always sell for a very low return.
And it's been proven.
It's been
And
proven.
and it's been proven time and time again. And,
You don't need any
And it was
other
just
proof.
proven.
Nope. Every fund buys it. Every single person can exit a new construction building in a good location. There's no one that can't exit that.
Now,
With a 428, without a
I,
428.
and I
whatever.
will say, I think the only pieces of land, the development site sales, I think once you go bigger, it gets pretty hard, because then you're talking about the 421A discussion, and people push back on that. But I would say
sells.
these 25 by 100s, these 50 by 100s, I could speak for North Brooklyn. I mean, those are selling in 2 seconds.
Yeah, in the middle markets though, where it's all rental, a lot of that stuff isn't really selling because
Yeah.
they need the 421A.
They need the
I don't get
421A.
why
They need
it's
tax
not,
abatement
but
to make the numbers work.
I don't want if someone listed a good site in Bushwick.
The taxes will eat the deal alive.
They're
you
starting to
still-
sell.
So what though? You still have a brand new building.
We saw one trade last week, 200 a foot
So that's.
Where at?
But hold on.
on Menahan.
That's not a down price.
No,
That's
it's
a real
not. No,
price.
that's why
Menahan?
I agree that
Yeah.
all
There's
assets
also-
are in
there
demand right
condos- There
now.
are condos there
No,
too.
but hold on. Condos in Bushwick. There's no condos in Bushwick.
Yes, there are.
There are. But like, that is such. I mean, everyone is running for the lifeboats on condo projects in Bushwick. You're either you're selling them or you're renting them. Dude, I don't know, but interest rates just destroyed that market. Because that's who's in that market. Like sub $1 million deals. Interest rate, the buyer for that.
What I was saying is there are condos in Bushwick. They're
I guess.
all over Bushwick.
I guess.
And I was referring
Definitely.
to markets where they're not
Ouch.
condo markets and that the land is geared solely towards rental. I feel like that land is pretty stagnant, like not really in high demand.
I know, but who-
I feel like there's a big disconnect between
Bushwick's a
buyers
good
and sellers
opportunity
on
for
that.
that.
So what I would agree there is it's the disconnect between sellers and buyers. I think in some markets you're seeing. I would say the more sophisticated markets have identified where pricing is now, and that's why I think you're seeing people transact in other
On land.
on land, on whatever asset it may be, rent stabilized. But when you go to some of these other areas where real estate's not their primary focus, they are still acting as if it's 2017 with the abatements, everything's good, land's on the rise. You're not seeing those same prices.
No.
Now, if they still said they would sell for the market price, there's buyers to buy that land. They're just not at the price.
Yeah.
I know it sounds simple, but that's what it is for some of these rental markets. Like the Bronx, for example, land is flying. Still to this day at higher prices than ever. Every piece we're getting offers over $80 a foot.
Yeah.
So why is that?
Because I think it's a price point to some extent. Like affordability is an issue in New York City.
Yep.
You're buying dirt at $80 a foot. It's
And
hard
they-
to go
and they-
wrong.
and they
They're
could
building.
sit on
They're
it.
basically building with cinder blocks, and then you're gonna rent out to some kind of program.
Yeah.
I think land definitely is a damn good listing right now. It
All
really
right.
is.
What else? What else is worth focusing on?
From a broker standpoint?
Yeah, well, I mean, we just spent a lot of time talking about land, but like, what other asset classes or just what else is worth paying attention to?
I mean, the next thing would be multifamily. I think it's always like multifamily is so strong, and that's vacant buildings. I mean,
Yeah, vacant
that's-
buildings.
Vacant.
Yeah,
It's
vacant.
like vacant is king, and I think it's very similar to land because you're not dealing with anyone. You're not going in and dealing with anything. Going in, you're building.
So you think in the market, land is the number one most in demand product?
Yes.
And vacant buildings are number two?
I would
Yes.
I would say so. Yeah.
What's number
Right now.
three?
Number three?
It's below market, free market,
yes.
like
so
tax class 2B?
strong number
2B.
three. Yeah. Well, hold on.
But that goes for your vacant buildings
Yes,
as well.
definitely 2B, but a strong you're a strong tie for number 2 or maybe a 3 is below market, free market. That is always.
What about
Yeah.
what about good cause eviction? Is that a concern? Is that
People are
coming
talking
up?
about it?
People are talking about it.
Yeah.
People don't seem that nervous about it to me.
I think people they talk about it to talk about it, but kind of in their back of the head think that it's not going to happen because they're like, oh yeah, they talk about it, but then they're like, they make buys that would be ridiculous if you think that's actually going to happen.
So you're saying a below market, free market, tax class protected building
Yeah.
where the plan is to go in and evict or buy
Yeah,
out
I'll-
the tenants and then renovate
I'll-
and bring
yeah.
the building up to market potential.
Below market, free market is number 3 because below market, free market is not an easy thing to get out. So that puts it number 3. Number 4 is a destabilized free market product because it's hard because you have
very
to
hard.
really get someone comfortable that it is actually free market, quote unquote.
Yeah.
That's at number 4, and you're just number 5. Picking up the caboose is rent stabilized. That's it.
What about,
That's it.
I mean,
What
look, I mean, we do have. There's buyers for just rent stabilized, cash flowing,
What about the,
clean bricks
but it's
too.
still-
Though.
it's
What about
still
partially
caboose.
free
Yeah.
market, partially unstabilized? That one on the
Ooh,
list?
I
Is
forgot
that
about
number
that.
number
That-
5?
I mean,
to
that's
6?
probably-
no,
that's your
in there.
caboose.
That's the deregulated, stabilized stuff.
Got it, okay,
That's
okay.
before the caboose,
Fine.
but in the rear. Yeah.
All right, where Where are cap rates? Where are cap rates? I know that's kind of a loaded question. It's January of 2023. You mentioned earlier in this conversation, Luke, 7 caps, which is unheard of, which would have been unheard of a couple years ago.
But makes sense today.
We're seeing it today, yeah.
Yeah, because it makes sense because
Are we
we're
seeing
extremes.
Are we seeing 8 caps in New York City?
I haven't seen any 8 caps. I mean, but you could
Steve
definitely
has.
you could definitely
In the
scrunch
Bronx,
some up.
What
not
about Brooklyn? Some of the rent stabilized stuff in Flatbush?
it hasn't gotten to 8 caps.
Okay.
But they're not really 8 caps. Like,
I
hold on,
get it.
not to cut Steve off,
Yeah.
but they are 8 caps, right? Like if we put our Excel
On paper, yeah.
Like that deal where everyone's talking about the 20 unit, right?
The
like,
20 unit.
Like, can you say it's 8 cap? But yeah, but there's violations on these buildings, and there's people in arrears. So if actually you start after deal with the violations and put the money in, like you're not really at an 8 cap. There's no such thing as an 8 cap, like clean deal, right? Like you could buy an 8 or a 9 cap, I'm sure, but by the time you're done like stabilizing it, like you're down again.
Okay, so all right, so you saw a 7 cap sell.
Yes.
But where are cap rates? I'm like, what's the spectrum of like, this is the asset class, this
I'll
is the
tell you.
cap rate, this is the location.
Well, it depends on so
I get
cap
it.
rates depend everything on location and where it is,
Yeah.
obviously.
Mm-hmm.
I think if you have a deal where it's a solid location and you have some stability in the rent roll and there's some upside, like I would ask still in the low to mid 5s for that because I think there is a buyer to try to break even and hope for a better day with really good stuff. Good location, good product. I do think they'll look for a path to break even and hope for some upside.
Couldn't agree more.
You agree?
Spot on.
But bad location, like you're looking for yield day one. Like let's say Bushwick. It's not a bad location, it's a great location, but it's a yield buy on that type of stuff. That's where you see a 7 cap come in, and 7 cap makes sense because you need a gap between the cap rate and the interest rate for you to make some money. That's that market. And then there's the market where cap rates you're throwing out numbers like 8, 9 caps, and that you're going to buy very
What is
tertiary.
selling? Like, say that I'm a buyer and I'm looking to buy a deal. Like, I'm not greedy on the cap rates, but
Yeah.
I want something like high 5 cap, low 6 cap. Like,
Yeah.
what kind of deal am I looking at?
You're looking at. Someone else want to jump in here? I mean, I have an answer.
I
But
mean-
I think you're
jump
looking at you're looking at like your destabilized kind of in quotations rent stabilized type of building.
Okay.
You're at a mix.
See, in
At
my
least in
my
my
market,
market.
you're not seeing prices that high.
You're not seeing that high pricing.
You're not-
I can get a better cap rate than that
Easy.
in some of these B neighborhoods.
Yeah, in B neighborhoods, I actually think for once you're not even really looking at cap rates for some assets, like especially free market, strictly price per foot. If they can be in that like 350 to 425, 450, it's a buy.
see, to me, it's not even.
Now
cap rate,
for
too.
rent stabilized, you're looking at cap rates, and you're looking at 7 plus. Now, even if it's free market and say it's 4 apartments in a store, and your income's there, but the price per foot starts to get out of whack, you're still buying 6.5, 7 caps.
Yeah.
I'm talking about where you have like railroad units that you're getting 2,000 a unit.
You're
in
saying
rent.
if the price per foot gets too high, then the cap rate is.
You don't want it.
Up.
Yeah,
the cap rate's going to go
cap
up.
rate is going up
Because there's
no,
a limit to the overall cost basis
Exactly.
in terms of price per foot.
so I think
price
cost
per
basis
unit.
becomes extremely important.
Yeah.
I think take it a step forward with the rent stabilized. Let's just talk about Bushwick. There are buyers. I think most buyers would rather buy let's say you take the same location in Bushwick. You take a brick 6 family at a 6 cap that has no violations, and you don't think the manager's going to be a huge headache. I think there's more buyers for that than the same block, a frame building, 7 cap, but you have a ton of violations and
Yeah.
you have some like sketchy tenants. I think you're taking the less cap rate for the easier managed building
Definitely.
that looks better. I would much rather own that because you know what? Everyone knows at the end of the day, you're gonna make more money on that deal than the 7 cap with the sketchy tenants.
Yeah.
With the more deferred maintenance. So it's not about cap. I think cap rate is. I don't know.
So cap rates, you're saying whether or not it's a metric you want to pay attention to right now.
I don't know.
Dude, it's a great metric. But,
It's a great
It's a good metric, but it is a little
it's a
loaded.
phenomenal metric.
I'm not saying it's a bad metric. I'm saying
the best
that,
metric.
in that situation, I don't know. Yeah, but
It's the
cap-
starting point of every financial analysis you need.
Yes, but like the first month that someone doesn't pay, then your cap rate's gone.
For sure.
Yeah.
So
So
you throw the
doesn't
cap rate
mean-
out the window.
Cap rate's a good metric when there's nothing going wrong.
So
ever.
anyway, to wrap up the conversation on cap rates, you're saying
Yeah.
low 5s up to potentially 7 or so, depending on what it is and where it is.
Yeah, you could definitely get 6 caps. You could
Where-
get 7 caps, yeah.
Where do we see cap rates going this year? Staying in this range? Do we see them coming down, maybe?
I stand behind stability. I think you're seeing
Yeah.
the same thing.
Yeah.
I think the ones that are going to sell have come to reality where the market is today, and they'll sell. And people will be lined up to buy them.
I don't think cap rates are going up.
You don't think they're going up?
I mean,
Yeah.
there's
They'll
things
go
that
up
can
with
happen.
rate. If rates go up a
There's
tiny
things
bit,
that
they'll
can
go up.
happen. That would be bad.
It's hard to see cap rates going up a whole lot more from here. They went up a lot last year.
They had to.
Yeah, of course they did.
There's a lot of stuff selling in the 4 cap range.
Interest rates went up a lot.
Yeah.
So there you go.
All right, cool. Anything else that you guys want to go over?
I mean,
Looking
we
into 2023?
I think we covered a lot of stuff. I think Steve hit it on the head with stability. I think there's not going to be a whole lot of surprises, and I think there's a lot of I had a number of phone calls in the last 2 days about people wishing they jumped on deals in December.
Yeah.
They're like, gosh,
December was a slow month.
They were like, shit, like I could have bought this deal. The brokers were calling me. I could have bought this deal like during the holidays when people thought the rates were going up more and getting crazy.
Yeah.
And now that same deal, like the pricing changed.
Because there's more demand.
There's more demand.
There's more eyeballs in the market now.
There definitely is. There was definitely a window. Fourth quarter was interesting for buying. I think there was a window. It was sleepy.
Like Thanksgiving to Christmas was a
Yes.
pretty quiet time.
Yes. And people were like kind of bummed out. I think there was an interesting time if you were to buy some deals, and you probably could have.
Mm-hmm.
And now I think that's rear view, and now it's more stable, but more people are paying attention to it.
So now we're seeing a pop in activity because buyers still see the window of opportunity and they don't want to like COVID, like just look at the stock market for COVID. In 2020,
Yep.
the stock market dropped so much, so fast and then went right back to where it was. I forget the amount of time, but it was like 45 days or something ridiculous like that. It was a small window to buy stocks. And the real estate...
And real estate.
The real estate window was longer, but there's a lot of uncertainty and the window closed pretty quickly. And now people remember that. So people, I think, were thinking like, I don't know. I think people right now are thinking like, let me take advantage of this window of opportunity before this window closes, before the rates go back down again, which is a realistic thing. I mean,
Yep.
there's people that mentioned maybe it's tied with the election when the rates are going to come back down again, and who knows what kind of rent growth you continue to see. But the most interesting thing to me in real estate, the single most interesting thing to me, is how sensitive pricing is to small movements in rents and small movements in the cost of capital.
Yep.
Like small adjustments in interest rates, bank financing, small differences in the rent that you could squeeze, $50, $100, whatever it is, across the entire building over the course of the year. That if you just cap that out at a 5 cap, it moves the needle a lot. Yep. Or whatever the cap rate is, it moves the needle a lot in terms of pricing. So I think that's the most interesting thing to be looking at constantly.
I think, I agree with you 100% there. I think 2023 is going to be, I think there's still going to be some uptick. I'll tell you why.
In activity or pricing?
Both.
Yeah.
I think apartments are a really easy sell right now. Rental apartments in New York City is a really easy sell. People are looking for them. Buying right now, if you were to buy a home, I've never seen a harder time. I play games all the time. Like I'm not looking to buy a house or an apartment or a condo right now, but people look for fun. You can't do it. You can't. There's nothing. First of all, there's nothing on the market.
Really?
Whether it's in Connecticut, Fairfield County, or New York City, there's not a whole lot of new things coming up. Connecticut, there's nothing. In New York, it's very little. And then you take the affordability into vision, right? Like interest rates are very high. You look at a condo in New York, you have HOA fees and taxes and all this stuff. So between your interest rate that you're going to have to pay, the amount of money you're going to have to put down, the monthly nut to just cover it, and then the fact that there's really nothing good on the market to buy anyway, you're just jumping into renting. 100%.
I will say, just looking at the transfers, and
Yep.
Steve sent over a transfer in Bestreich today, but I look at all the transfers obviously every week, and I live in Park Slope. I own in Park Slope, and I just check to see what's going on. I'm shocked at how high the prices still are for deals that are closing now. They're getting recorded at pricing where every single time I'm like raising my eyebrows.
It's eye-opening.
Wow,
Because nothing's on the market.
I'm like, we're still at this kind of prices. I thought as interest rates went up so much, I really expected prices to drop a lot for the housing market. In my head, I thought, I don't know, this is just a made up number, but I thought values were probably down around 20%, and you're not seeing that in the comps.
Mm-hmm. Why is that though? Because it doesn't make sense.
I just think there's still a lot of money in the market. I think people have a lot of. I think there's a lot of good income. I think there's plenty of buyers that are all cash. I think there's just a whole dynamic that's changing in the market in terms of who the buyer is and like what they're looking for. I think so many of these millennials that moved to New York and they started out with roommates and then they lived with their girlfriend and they had like a 1 or 2 bedroom in Williamsburg or wherever. These people don't want to move to the suburbs. They don't want to do the commute. So now they're starting to have kids. Some of them have 3 kids or whatever it is, and they need more space. And I think they come from wealthy families. I think they have good jobs. I think they've been working for many years. They have accumulated a nice net worth of somewhere, around $1 million or more in many cases. And I think that it's just a matter of they just want space and are willing to grab the space and they're willing to bet on the housing market in New York City.
I think it's got to be inheritance.
I mean, that's part of it.
It's got to be all of it. I mean, if you see, all right,
That's not all of it.
Cash buyers, that's a dead
Yes.
giveaway.
Okay.
Cash buyers is that's one thing. Either you're in a hedge fund and you get $5 million bonuses,
Yeah.
which is a very little amount of people, or you just inherited money. That's a cash buyer, okay? Especially a young one.
100%.
So we can agree with that.
The
Okay.
cash buyers are inherited money.
Okay. So
But hang on, you see a lot of people getting 80% financing.
And I honestly, 80% financing, like
Those are the regular people.
you have to have a
that-
very good job because interest rates today, like with a high mortgage and taxes.
We're selling a property right now. It's Toby's listing. It's a
Yep.
3-family in Clinton Hill.
Yep.
And the buyer that's buying it, they sent over their financials. It's a husband and wife. They make over $400,000 a year. They have $1 million in
Together?
cash. Yeah.
They make 400, and what are they buying?
They're buying a house for 2.4.
And they're putting down how much?
They want to get 80% financing.
They want to get 80% financing.
They're first time home buyer?
Their first time. Yeah, I mean,
Yeah,
they're-
so that's what you can get.
That person's gonna get crapped on.
What do you mean they're gonna get crapped
I'm telling
on?
you, 400 grand in income.
But dude, they're
for,
doing-
for that's not a lot.
these
For
first-time
how
home
much?
buyers,
For the
dude,
mortgage?
so hang on. You have to look at the debt to income
It's gonna
ratio.
be over 15K.
I'll tell you this.
Guys,
I hope as the broker,
I
on this
ran the-
deal
I
that
ran-
it's not just contingent on financing. Because
I ran the numbers on this
dead.
because no, it's not dead, and we're doing
Oh.
contingent on financing. And I spoke with mortgage brokers and lenders about this. Dude, you have on these kind of deals, it's a different type of deal. You have to run the debt to income
Yeah.
ratio. So you
What
have to
is
look
that?
at what's their cost of debt compared to their income. I think the mortgage they're trying to get, I think it's going to cost on a fully amortizing, I think it's like $11,000 or $10,000 a month or something.
Mm-hmm.
So you basically take that $140,000 a year divided by their $400,000 of income. That debt to income ratio is like 33%.
It's not
What
real.
about tax?
Tax on the 400 because they're gonna get
So-
murdered
so
on
you-
that.
No, they don't look at the taxes on that.
Oh, they don't. That's
No,
good.
They look at the gross income. I'm just telling you how the
Oh,
tax.
I know. That's the number one issue.
Are you talking about real estate tax or
No. Like,
No, I'm talking
you
about
make 400K,
income
you're
tax.
taxed 35,
The bank doesn't
40%.
take that into consideration.
I know, so their real
Which is
income's
probably a
200K.
mistake.
What he's trying to say is they can't afford that.
They
No,
cannot afford
but
that.
I'm telling you, they're going to get the financing.
They might get it, but
They're going to get it.
they'll get it because banks are in
And
business.
He's saying
but
they're gonna be house poor.
They're
They're gonna have a very tough
they're-
life.
those- Still gonna have a hard time.
So what? I don't think they care.
400 grand on that kind of mortgage that's a tight. You're tight. You're very tight, and you're not talking about taxes on the real estate. Your electric,
Tax is probably
the
nothing.
heat.
Yeah, those are small expenses.
Yeah, another. Yeah, but I'm just saying.
But I was speaking with the mortgage broker today, and he said that he'll do up to 50%
Ooh.
debt to income. So in other words,
Debt.
he'll allow them to have debt service on this house of up to 200 grand on a 400K gross income, which basically means there's no money for anything else. But
Yeah.
this is how the bank is looking at it.
Okay.
So in
That's why you have
terms,
this housing bubble.
in terms of the housing
or
market-
I say
Yeah, I
go
know.
buying. Yeah, I mean,
in terms of the housing
Jesus.
market, it just marches on, man. The housing market marches on, and 80% financing.
Well, the banking business marches on.
that's the entire housing market.
Yeah. Well,
The residential housing market. And 80% financing is a very real thing. People get it all over the place.
Yeah, I'm hearing 80% first time
Oh,
home
yes.
buyers all the
oh,
time.
people are getting it. I don't think it's smart. It's a lot of. I think 80% is a ton of debt.
Dude, that's a
Ton
different
of debts.
argument altogether.
One thing happens in your job and you're so done. 80% debt.
Yeah, but on the flip side, Luke, I mean,
You tell it's like an old school guy.
you could, dude.
he would do no
They're
doubt.
getting
Old
school guy
a
would do no
property.
doubt.
They have equity
Dude,
in the
homes, it's
property.
normal.
Potentially, they have upside if there's appreciation compared to the rental market where they just sit around. You could say the same thing. You know, they're throwing their money away towards rent. Like, who knows? I don't know what's right or not right. But
Yeah.
in terms of the housing market, this is why it's very interesting that the prices haven't come down. There is great financing available for it. Even on the investment sales market, the financing is
But
very
let me ask you this,
attractive.
with interest rates going up, I hear you on that.
All things considered.
But you're forgetting one thing. What about appraisals? Appraisals is something else. I find.
Dude,
you make
prices haven't
400
come down. Appraisals are just looking at comps,
I guess.
aren't they? What else are they
I don't know.
looking at?
I've heard other things, like in other markets.
What do
I've
they look
heard-
at?
No, I guess they're looking at comps. I guess they're looking at comps, right? Appraisals did go down in other markets.
I'm sure they did. They had to.
They had to. It's definitely inflated. Appraisals did go down, but maybe not in New York. Maybe they did though. I don't know, man. You can't sell
Who
condos
knows?
in New York. It's very tough right now.
I don't agree with that.
No, in Manhattan, I've been tracking that.
We got to get a we got to get one of the residential guys on here to talk to us about what's going on in the residential world. But it seems to me like, dude, I'm amazed at how strong the New York City housing market is. There's so much demand for people to buy a home, which is like a whole other conversation altogether, which we can obviously talk about because we've debated this at length over the years in terms that we think it's not the best financial move to buy a home. But man, that American dream,
I
the
think
desire to own, it's so strong.
I think there is. I think you could buy. I think there's a different. You gotta buy. You really gotta be able to afford it. And I think I would buy a house cash or 50% or 40% down. I think if you go and like overspend and put a ton of leverage on a house, you can get in a lot of trouble because banks will clearly give money to anyone in that situation where they're not making smart decisions. I mean, that's insane. That person can get that loan on 80%. I mean, that's I'm not an underwriter, but like just in my head, like that's a bad loan.
For the bank.
Yes.
What about for the borrower?
Yes, both. Because it's not for the lender. I mean, that doesn't really matter. Obviously, they don't get hurt ever. But like,
Yeah.
that person cannot afford that loan.
Well, they're
They
doing
cannot. Oh, I'm sure they're doing it. But they can't afford it.
Best of luck to him.
Yeah.
it. All right, so just to keep on track here, 2023. Any other predictions, takeaways, thoughts?
So my prediction for 2023, I think will be the year of the rent stabilized property. And I'll tell you why.
Ooh, this
I
is
think
good.
people like to go against the current. There's always opportunity, and I think a lot of people were buying rent stabilized in 2017, 18, and they're gonna have to sell.
Yeah.
And that's it.
They're definitely going to sell.
So I think you see the pricing guidance and discovery. I think you're going to see a lot more than you think. And I think there's going to be people that are going to, it's going to be hard to turn down a 7.5 cap in New York City.
If prices get there,
They're there.
people will buy those
Yeah.
all day.
And so, like,
You
I
have
think
to.
people are going to be forced to sell. And I honestly think you're going to see a lot more than expected.
Forced to sell based on their loans.
Yeah.
I was surprised some people pulling trigger in the last couple months in the comps. People lost a lot. People lose money. It's crazy.
Dude, going into this year, I mean, why throw good money after bad?
Oh, I know. I was just very surprised.
You know?
I saw
Take your
one
bruises
sell
and
or
move
some-
on.
Yeah. I saw one sell like in December. Someone lost like $5 million on purchase the last time to what they sold. That doesn't count like renovation,
Yeah.
and carry, and all
Why?
that.
What was the deal? What kind of deal
It's just
structure?
a bit multifamily, Upper Manhattan.
Big deal? Like,
It
was the $5 million like a big percentage of the overall price?
No. No, no,
So
no.
it was a big price point.
Someone lost $5 million. It was a bigger price point.
Yeah.
It was like 6 deals where they lost like $5 million. But yeah, I mean, the buyer bought it for $5 million less than what they did years ago. It's crazy.
Yeah. Yeah, it's interesting when you start to see the whole reset.
There's definitely a
Donald,
reset.
anything looking into next
I
year?
mean, no. I mean, I think it's going to be just a very stable market where I think you're just a lot of these vacant buildings. I think we're going to see a lot more of these vacant buildings start to pop up just because in my conversations with clients, I think the word has gotten out where they need to present their building in a certain way in order for it to sell for the highest price. And the more conversations I have, the more they know about the 80% vacancy,
Yeah.
the complete 100% vacancy. So I think you're going to see a lot of opportunities a lot more opportunities like that.
Redevelopment, value add.
Redevelopment,
Yeah.
a lot of vacant building sales because the client or the seller is already positioning their building to be that way, rather than last year where it's like
a good point.
this new law and no one knew what you were talking about.
Yeah, even on the free market stuff, it's like the low
Yeah.
paying. Like we sold that
No one-
building, that 3-family in Greenpoint, and a big point of that for the buyer was there's a tenant that had been there for 20 years, paying like $1,000 a month, and he's like,
Oh.
this person
Completely
needs
risk
to be-
averse. Yep.
needs to be out of here, and the seller took on that whole job of buying out the tenant, relocating them, delivering that unit vacant. That buyer was willing to buy the other apartments occupied.
Yep.
But I think you're right that a lot of these owners are going to start to realize that this is how I get the highest price for my property, and they'll position them for that.
They-
They're
they-
already starting. They're already having the conversations in terms of if someone needs to be bought out. They're having that conversation already. They understand the feedback that they're getting, and it's real feedback, where investors do not want holdover tenants. They do not want your tenant, and they don't want to be in any position where they have to negotiate with a holdover tenant.
Yeah, there's a gap, but it's a small gap between the caboose and the under market free market, which is the state rent stabilized and that. It's obviously you'd rather have under market free market, but it is not like much better than rent
It's
stabilized.
kind of a risky asset.
I
in a
will
way.
never understand why an owner or a seller will not either do their best to vacate, raise the rent, or evict.
Well, I'll tell
Because
you why. A lot of people, understandably so. I mean, they need the income. It's scary. We just did one, and I understood where she was coming from. But we sold a 4-family, and the person needed it vacant, and they got it vacant. But like it does, if you're relying on the income, I mean, you do own an income producing property for its income at the end of the day. So to listen to a buyer and a broker say you need to get it vacant and just snap a finger,
100%.
throw your income to the wind.
Yep.
but you'll see through pricing though.
Yeah,
I
but
mean,
it's
your
still
offer,
scary.
I
your
know.
offers come in.
People are realizing
Still
that
scary
now,
concept.
but it
But
took
to
a
Donald's
while.
point, they have to do it.
They have to.
They
but
have to.
it's
They're now
scary
left no choice.
But to answer your
I know it's
question, I
scary,
don't understand
but-
why. That's why.
Yeah.
Losing $500,000 because I have a tenant in there is scary.
That-
So I'm going to get him out before I care about
Yeah.
Some people don't realize that.
1,500.
But
I know.
that's not
They
a
don't realize that.
realized.
They don't realize
that's
that.
not a realized cost to them because it's not reality. It hasn't happened.
It's not. Yeah.
Anything else, Luke?
No.
Okay, cool. I think we leave it there.
What about you? I want to hear your prediction.
Oh, my prediction for 2023. Let's see.
Have to throw you on the spot.
I think
now. Come on.
rents went down for sure. I don't think they plateaued. I think they dipped.
Okay.
I think rents will go up higher than. I think the rents this summer will be higher than last summer.
Whoa, but you said they were going to go down. The rents.
Yeah, he
They
said
have-
they already went
I,
down.
I think the rents were at a peak in August or September.
They went
I think they dropped probably 5 to 10% going into the winter. I think right now they're probably 10% below where they were over the summer. This
Fine.
is just like my feeling. I don't.
Yeah,
This isn't like
you're probably
scientific, but
No, that's probably right.
this is my
And
opinion.
that makes
I
sense.
think that as the spring rolls around, I think you're going to start to see the rental market heat up a lot again. I think you're going to start to see lines around the corner for units. I think you're going to see rents go up from where they were last summer. So, in a way, it's kind of counterintuitive because I think the economy has slowed down. And I think, in a way, like, there's less capital, like money in the market because I think people's people got laid off. I think there's less money in the market now than there was. I still think there's a lack of supply. And because of that, I think rents are going to go up. I think interest rates for bank financing are probably going to stay around where they are. I think there's a big gap between the Fed funds rate versus where banks are issuing debt, and I think the banks need to issue debt in order to keep their businesses going. So it seems like, and I don't have full statistics on this, but it seems like rates are already coming down on bank financing. So in that regard, I think you'll have higher rents, and I think interest rates will drop. So I think you're going to see a lot of activity. I don't know. I think it's going to be a pretty active year. I was kind of concerned in Q4. Q4 was one of our worst quarters, in quite some time in terms of new fees under contract. Granted, it followed Q3, which was by far and away our biggest quarter ever, where a lot of sellers wanted to get in front of the interest rates before they went up. But yeah, I think it's going to be a good year to be a broker. I think sellers are going to get, reasonable prices. I think buyers are going to get, great buildings at reasonable prices. I think you're going to see a lot more 1031 money coming into the market as the year goes on. And so overall, I think it's going to be a great year.
Well said.
Yeah.
Okay.
Agreed.
All right. Thanks, guys. We'll leave it there.
All right.
Till next
Awesome.
time.